Hey guys, welcome to Batting 1,000. We are back, and as you know, every time we do one of these, we are with heavy hitters in the mortgage industry. There's no heavier hitter on the planet in my book than my dear friend for many, many years, decades. One of my favorite guys on the planet, and one of the nicest guys I've ever known, and a guy who has just been an icon in our industry. You all know Barry Habib. He doesn't need an introduction, but I'm going to give you one anyway. He is the author of Money in the Streets, just an awesome read. So if you have not purchased his book, purchase it, please. By the way, Barry, I need a signed one of these copies. So I'm going to have to, next time we're together, I'm going to have you sign it for me.
We need to spend more time together, brother.
We do.
You know, we got, last time we were together with Jake, which was really wonderful. You know, Jake's the running everything for us here. He's amazing. So I love spending time with you guys.
Well, we love you, my friend, and it's good to see you. Barry, you've just been doing everything. You're director on the Fannie Mae board now, along with being a #1 best-selling author, along with the fact that you saved our bacon in 2020 with all the great advice that you gave to Fannie Mae at that time. You were the 2024 Crystal Ball Award winner. I could go on and on and on. Barry, you've done an incredible job in our industry. We're grateful for you. I'm grateful for you as a friend and love spending time with you. We do regularly, and just chatting and praying and just talking, and looking forward to the next time we get together. But today what I want to do,
by the way, it's right back at you. Just right, because what you do for the industry, and you're a giant in our industry, and we can't even count how many individuals in our industry you've helped, how many homeowners you've helped, how you have been able to get people through difficult times, maximize good times. So you are extraordinary, brother.
That's so kind. Thank you so much. So let's start with the important thing. I know you've gone through this couple-year stint with cancer, and I know everybody I talk to was always asking about you. I tell them how you're doing, and I know things have gotten better. Give us a quick rundown on how you're doing, and man, you look great, and things are better. And I can't wait for you to tell the audience about it.
Well, I'm feeling really good, and first of all, very grateful to God. I'm very grateful. I'm always Amen. Very, very grateful for where we are, and I have been blessed with being able to find Dr. Patrick Soon-Shiong out in LA. I've been regularly going to him for the past year, a little over a year now, where it was this drug Anktiva that really has helped me. There's like a 15,000 person waiting list. So as you know, I'm very involved with trying to get that, in front of the president, and with some of my friends like Tony Robbins, and I've got some avenues that I'm really trying to get that so there's a wider reach. But I've also helped quite a few people get in touch with them. So I'm trying my best with everything I can to give back for the opportunity that I've been given. I've become very friendly with Dr. Patrick. He's an amazing, brilliant mind, awesome. His whole staff there. But you have to go there to get the treatment. So I'm an East Coast guy, either Florida most of the time, Jersey sometimes. So regular trips to Cali, it's not easy. And I was just telling you before we started recording, starting this year. So I've been in remission now for like 11 months, which is just oh my goodness. Dale, it's been quite a ride. I went through chemo, that didn't work. Went through radiation, that didn't work. Went through CAR T. It's like $1 million procedure. Thank God for health insurance, but that didn't work. And it was this engager, this glofitamab, which is what I got from Sloan. But my T cells were exhausted. That's the thing. You get these cancer treatments, and your T cells, which are your killer cells, become exhausted from it, your bone marrow, from the radiation, from the chemo, so they're not as effective. The Anktiva kind of they supercharge your T cells. So there's a way to measure the exhaustion. You could see in my blood work, as the exhaustion levels were reduced and the efficacy of my T cells improved. They're called LAG3 and PD1. As you know, I like to know everything, so I have a big study on everything. As these levels of exhaustion were reduced and the efficacy of my T cells improved, you could see it on my PET scans, which I do every 3 months now, is that the tumor size shrank, but the SUV, which is the one you have to watch that monitors like if the cancer is active, those levels improved. So it's irrefutable that this works. And so the beginning of this year, even though I was in remission, we went with a very aggressive approach to be proactive, and it required me to go out 2 out of every 3 weeks. And you get off the plane, and then you're in the chair for 5 hours of treatment, so it kind of beats you up. And then the treatment like makes you feel like you have the flu for like a week almost. Maybe the day before you go back, you feel good, and then you got to. But I mean, it hurts. It's standing hurt, walking hurt. You're exhausted, so you really have to tough it out. Well, after my last scan, they said, okay, look, what we're going to do is now once every 6 weeks come out to LA and just for the shot, which I tolerate better. So I'm feeling the best that I have felt.
Praise
I feel
God.
great right now. Praise God is right.
I
So,
love it.
you celebrate a little quietly, as you know, because you kind of go scan to scan. Then you just hope that it stays where it is. But now we're spreading out the scan instead of every 3 months. So we're going now every 4.5 to 5 months. So, inching there and just praying it stays there. But thank you for asking, man. I feel really great. I'm really happy, and I'm really grateful.
Well, we're so happy for you. I mean, this has been a long, long haul for you, I know. And I'm going to say this because it's true. The way that you have handled this, and I've watched you on the sidelines where I talk to you regularly. We talk probably weekly. And you know what? You've handled this with such grace and such just courage and positivity. Dude, you're every bit of the man that you claim to be. I just want everybody to know that people think of us as motivational speakers. Well, this guy's the real deal because he lives it out. And awesome.
I'll share with everybody here. Dale, you remember? I remember exactly where I was, and I was really struggling with the chemos when I was going through chemo, and it was like the 5th round out of 6 rounds of chemo, and I had to have that bag attached to me for 5 days, 24/7, 6 rounds of that every 3 weeks. And the 5th round, it was just brutal. I actually remember I got on the phone with you, and I kind of had a breakdown while I was on the phone with you and talking with you, but you were right there for me. I'll never forget it. So I really appreciate your friendship and your guidance. And the faith that we both share, to kind of get through this. So I'll always be indebted to you. I appreciate it.
Love you, my friend.
Love you too.
Love you.
Dale, when you bring that up, I want to kind of just talk to everybody who's listening that has been, I think we've mentally been, gone through some trying times over the last 3 years. Now, there's no doubt there's a lot of successful times.
Yep.
But let's face it, the interest rate environment has not been, a tailwind for us. And I think the worst part about it, Dale, is that we have had so many times, and I can count them over the last 3 years, there have been 10 instances where interest rates came down to a level where it looked like, oh my gosh, we're really gonna
Here we go. Yeah.
start. We're ready to go. And then it only lasts for a day, 3 days,
Right.
4 days, 2 days. And then rates move back up, and it messes with your mind. And everyone who's listening, I know that is very, very difficult to deal with, and it sucks to get that bad news. But what I want to tell you is just look, we go through in life these difficult times where you're going to face adversity, where you're going to be disappointed, where you're going to be teased, and just when things look like they're going good, something happens. And the choices we have is to cry in our soup, woe is me, feel sorry for yourself.
Yep.
And look, let's face it, I went through that whole chemo, and it was horrific, only to find out it didn't work. Hey, the day that I found out the bad news, Dale, you know this, that afternoon I had a webinar for UWM for 5,000 people. Somehow I sucked it up and did it. Now, could I have said, I'm going to cry all day today? I'm not saying I hadn't cried, but am I going to feel sorry for myself? Well, the attitude I have is, what do I do next? What can I do where I can control things?
That's right.
Instead of worrying about what I can't control. And that helped me get through it. Now, after the chemo didn't work, obviously I was heartbroken, in shock, because I thought it was September 3rd, 2024, went for the PET scan, and then to find out after all that, I thought I was done.
Right.
It didn't work.
I remember that. I remember that clearly.
And so what I said as we got on with the doctor was a Zoom call like this. When they broke the news to me, I said, okay, what do we do next? And I just held it together, and that's the way I went about it. What do I do next? And then what I did next didn't work, the radiation. And what do I do next? The CAR T, that didn't work. What do I do next? And as it turned out, finally something put us into remission, put me into remission. So look, there is a common thread amongst the happiest and most successful people, and that is optimism.
Amen.
If you remain optimistic and
That is
instead of
correct.
feeling sorry for yourself and say, look, one thing we all know that the days that we have on this planet are not infinite, right? It's a finite number of days we have.
That's right.
And when you're faced with something like we've maybe, God forbid, I hope no one's ever had this, but it's part of life, where you're faced with, your own mortality. And it's been very clear to me, that it's very clear that we are limited with a number of days. So you have to make a choice.
Yep.
Am I going to spend the days that I have feeling sorry for myself, being miserable? Or am I going to say, hey, I've got these days, I'm going to be joyous. I'm going to be grateful. I'm going to try and bring joy to others because that's what's going to really make me happy. I'm going to get the most out of the time that I have left by being optimistic and doing everything I can to be happy during these periods. It's a mental choice. And it's the same if you're disappointed at work. You could bring it home. You could be miserable, or you can enjoy your family, even though rates suck, even though there's other things.
Right.
You can be in a position where you say, what do I do next? And Dale, we've talked about it. What can we do next? We could do things like, okay, rates are higher. Let me be prepared for the next time rates go down and contact my clients now so that I can do it. We call it the strike rate. You've been teaching this for years and years, Dale. You've been professing this to people and helping people with this. But prepare during the times that are a little bit lean. Use it to prepare so that when you get the opportunity, even if it's fleeting, you could benefit.
Yep, love that. Boy, if we stop this right now, that segment right there was well worth everybody watching the show, because that was a great message of encouragement, and it's true. And look, even in the lean times, people are still wanting to buy homes. People still want the American dream. People still want to save money. People still want to get out of debt. We've still got a debt problem that is massive in the United States, and we've got the solution. It's called equity. We got more equity in properties than we've ever seen in history. So even within the bad news, there's lots of good news, and we've got to find that good news. It's that optimism that Barry just talked about that you have to have. You got to see the glass half full, guys, or you're not going to succeed in this market for sure. Maybe you can pull it off in a 2020, 2021 market. Those days are gone, and we've now got to regulate ourselves back into the marketplace we're at today and learn how to succeed in the marketplace we have. And remember, borrowers still want to own homes, and they still look for your help. Your advice changes people's lives. So here's what I want to do. We've got so much to talk about because so much is happening out there. We've got the Iran conflict. We've got Jerome Powell heading out, and we've got Kevin Warsh heading in. We've got inflation issues. We've got job issues. We've got all kinds of economic indicators happening. And there's nobody better to help us understand how to navigate through this than you are, Barry. So share with the audience what you're seeing happening out there in the market. What are some of the things they can be doing to win in this marketplace? And what do you see the long-term forecast to be from where we're at today? Where are we headed?
Okay, so a lot there. I just want to make one point to underscore what you had said before, Dale, because it was such a good message. And I think that what everybody needs to understand, what Dale is saying and what I'm saying is that when you're faced with adversity, don't just say, okay, everything's going to be great. There's a difference between being realistic and a pessimist and being realistic and an optimist.
That's right.
That's what we're saying here. You have to work towards the positive outcome. What can you do next to create that positive outcome? See that in a way. Search for the positivity. Search for what can happen. So let's get to the economic stuff, Dale, because you're right. There's so much going on. Okay, where do we start? Let's start with the situation with Iran, with oil. So oil prices have gone up. So we look at West Texas Intermediate, or WTI. That's what it means. It's the Permian Basin in Texas. So we get a lot of our oil from there. So therefore, it's kind of the benchmark price. That WTI, right before the war on the 27th of February, was pretty darn low. It was $67 per barrel. And just so you know, one barrel of oil is 42 gallons of gasoline. So just to give you what 1 barrel of oil means. So a barrel of oil was trading at $67. Well, it started to go up, 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 up. And as it was going up, the fear is inflation. Because, you can't avoid it. It's in transportation. It's paying for it. I mean, all you guys and gals know when you go to the gas station now, it's not, $100 is not uncommon to fill up your tank, right? So, it's a lot more money. And for many families, that extra money going out the window means they might have to perhaps cut back or take more on credit. It's causing stress and strain for people. So it's not a good thing to have inflation. And it seeps into other areas. It costs more to transport stuff. It's a problem. And not only oil comes out of the Strait of Hormuz, you've got that Persian Gulf and then this narrow little 21-mile little horn that it's got to come out of. Yep. But you only can travel within a 2-mile range. So you might say, 21 miles, it's pretty big, but you can only transverse in a 2-mile channel. Yep. So it makes it very dangerous where, use of drones or things like that, you can do a lot of damage, okay? So Iran first started off with saying they're going to close the Strait of Hormuz. So not only oil comes out of there, but a lot of resources come out of there too, fertilizer, things like that. So it's become a problem in supply constraints. Now, we're a little less dependent here, but oil, if other nations or other places have to get oil from us, that's going to drive the price up. So that's why you're seeing these types of things, right?
Yep.
Now, here's the issue, is that when you look at where we were a month later, oil was at $100 a barrel from 67, and interest rates went way, way up by about 0.75% from their low. But what was very interesting after that was that oil prices continued to go up from 100 to 117, but interest rates went down.
Yep.
I mean, not back to where they were. You all know that. But why'd they go down? Because the fear changed from inflation to recession. Yep. Because higher prices in oil at a very high level or persistent level will cause a recessionary environment, and that actually would bring rates down. So this is why it's a very confusing time for the markets. Yep. Is that, are we in an inflation environment? Are we in a recession environment? Where's it going to go? Now, I will tell you that militarily, first Iran closed the strait, and then the U.S. decided that, no, you're not going to close the strait. We're going to close the strait with a blockade. Let me tell you why I think this is one of the most brilliant tactics in history, is because by the U.S. closing the Strait of Hormuz, you choke off the money supply to Iran to the tune of about $4 billion a week. That's a lot of money. That hurts. And it also, Iran's the biggest funder of terrorism, right? So now you are choking them off where it hurts, but here's the other part that's even more brilliant in the chessboard move. This is the real chess master move. It's because Iran has to continue to pump oil. If you know anything about how oil wells work, right? You can't stop them or cap them. It's like a switch.
Right.
And why do they need to keep doing that? But where are you going to put it? So they have run out of storage facilities on land, and in the guess is about 2 weeks is what the intelligence says, is they will run out of storage facilities that are offshore. Because remember, they only have the Persian Gulf there and so many tankers that are there.
That's right.
So in about 2 weeks, when they run out of that, they're going to be forced to cap oil wells, which takes billions of dollars and sometimes months to get online, and there could be permanent damage that does not allow them to produce at the levels that they were. So this could be devastating. My feeling is that we're waiting for that moment that'll force Iran to come to the table and say, okay, now we got to really get serious here, because they've been
too much.
Yeah. Yes. So we'll see how it plays out. But that's the oil market. Now let's talk a little bit about the Fed, because this is a very interesting one too. So the Fed has a difficult task in front of it. Again, is it going to be a recession? Is it going to be inflation? And in addition to that, there's another wild card here is the labor market. The Fed has a dual mandate, inflation and maximum employment. The labor market has not been performing very well. Somebody might look at, we don't have to worry about it because initial jobless claims are very low. That's antiquated thinking, because Let me just give you an example. What's initial jobless claims? That's okay. Heaven forbid, I lost my job. Now I'm going to go collect unemployment benefits. I'm going to file for initial benefit claim. I'm going to claim my unemployment benefit. So that's measured. But those have been so low. So the job market should be good, right? No. Maybe in 2020 or 2018 or 2015 or whatever. But today it's different. We have a gig economy. Let me give you a scenario. The median income in the United States for a household is about 85,000 or so. So I don't know. Let's just say $7,000 a month is what they're making.
Yep.
So if they're making $7,000 a month, they lose their job. Ouch. They say, okay, I can go on unemployment, right? Not work, look for a job, go on unemployment and collect. But the average that they're going to collect is about $20,000 a year. So I need, I need 80,000 or 85,000. I'm going to collect 20,000. That's a big shortfall. I'm not going to do it. Or they can do a gig job, which means I'm not going to collect unemployment. I'm going to find work, which I could do if I have a car. I'm going to drive Uber. I'm going to do DoorDash, Uber Eats, Lyft, or do a combination of them. Yep. And these people are making $60,000, $70,000 a year or more. Maybe it's not their dream job, and maybe it's not covering their expenses to the extent that they want, but it is helping them make ends meet.
Yep.
And therefore, they're foregoing the unemployment benefits. So foolish people are out there saying, oh, we got to wait for unemployment claims to go up to see it. No, you don't. Look at job openings collapsing. Look at job creations, many months of negative job creations. There's a lot of evidence out there that the job market has definitely become less strong. And that's why the Fed should have been lowering rates when they had the chance. Now it's very hard to do so. On the Fed chair, because you asked about the Fed chair. Fed Chair Jerome Powell's last meeting, as we record this, was yesterday. And he was really, he was something else on the press conference. He was just, I don't think he was very nice or respectful. I didn't really care for the attitude that he had, because here's what happens. For a man who has made so many mistakes, he's been a very poor Fed chair. Let's face it, a lot of the inflation that poor families are facing, the interest rates you and your clients suffered through at 8%. Jerome Powell has a lot to do with that. In 2021 and 2022, keeping rates at zero and also cranking quantitative easing when he didn't have to. The evidence was there. He should have stopped. But that created 9% inflation, what we hadn't seen in many, many decades. Yep. Families are hurting. And the bad thing about inflation, and you know this, Dale, is that it's not like you get 9% and then it goes away. That's cumulative. It's like a staircase. So You could say, okay, well, we're down to 3% inflation, but that's on top of the 9%, So it compounds. You had 9%, 6%, 4%. Now you're seeing 2 or 3%. Well, that doesn't go away. What Jerome Powell put us through, every family suffers with. And this man who has done so much damage, and by the way, he did it again in December. In December, surprise, I'm going to do quantitative easing of $40 billion a month. I don't know where he came up with that. But the problem with that was that it was too much. He said, we're going to buy short-term bills. Well, we weren't putting out that much in short-term bills. So that excess liquidity caused the money supply to go up 9% since December. When money supply goes up 9% and income goes up at 3 or 4%, you are in a position where your lifestyle, it has now diminished because you're causing an inflationary impulse. And that's why inflation's been so stubborn. Now you're adding the oil crisis on top of it, and you've got a mess that he's created once again. Now, every Fed chair since the Fed was created in 1913, almost everyone has been a governor or a member of the Fed, because you have to be to get started, right? So let's just say if you're put on the Fed, you got a 14-year term. Okay, so I'm going to be on as a governor of the Fed for 14 years. And in order to be the chair, you had to already be a governor. So let's say I'm a governor for 6 years, and then I'm appointed Fed chair. That term lasts for 4. So I served my 4 years. Now, theoretically, I still have another 4 years as governor that I could sit on the board, right? I'm entitled to do that. But nobody does that because it's not tradition. It's not right. You're the governor, then you're a chair, and then you ride off into the sunset. You don't go back as a governor. The last time we had this issue was when Fed Chair Eccles was Fed Chair in 1948. And his term was over in 1948, and he was going to retire and go off into the sunset like they all do. But President Truman said, hold on, one of the Fed governors passed away. Could you please stay on? And reluctantly, Eccles stayed on. Now, by the way, the Fed building, it's called the Eccles building. They named it after. That's what this controversy is all over, the $2.5 billion. It's the Eccles building. But he was the last one to do it. So this hasn't happened since 1948. But he only did it because Truman begged him to do it because somebody died.
Right.
There was only one other case where this happened. And it was the very first Fed chair. And Hamlin, who in 1916 stayed on after he was the chair. But he started off as the chair because somebody had to start it from day one as the chair, right?
Different scenario.
A little bit of a different scenario.
Yeah.
Jerome Powell has done something that we have never seen before. For a guy who preaches, the sanctity of the Fed, the tradition of the Fed, this man has only done things for his own self-interest all along. And he's been ill-equipped for the job. The guy's an attorney. He's not an economist. And he continues to do damage. And now, out of spite, he's on there. And he even said, well, there are some legal issues that are not resolved. And then he says this statement, he says, like, I'll leave when I see fit. You're a public servant. Excuse me.
Yeah.
When I see fit. First of all, you serve at the pleasure of the president, right? And this is this is something that you should not have that kind of attitude. I was very turned off listening to him.
Yeah.
A little more humility would have been nice after you made.
Absolutely. Absolutely.
So hopefully that answered some of those questions for you. But the big one you asked is, where do we see interest rates going? So John Maynard Keynes, a famous line when he changed his forecast, and he was asked by someone, he said, why'd you change your forecast? He says, look, when the facts change, I change. What do you do? and that's kind of the case here. So in January, we said that our low forecast for interest rates would be roughly 5.85%. By the way, we were the only ones that forecasted interest rates below 6. And guess what? By February, we had hit that mark. So we're the only ones right. But it's since gone up. So we are changing our forecast. We're changing our forecast based upon Powell's QE impulse, based upon what we see in the oil markets. We had no idea there was going to be a war when we made our forecast in January.
Yep.
So given the oil situation, we think we might get a low in interest rates of about 6 1/8 if they swing back down. So just that might be a really good time to prepare for with your customers for a refi, quick if it hits that. But we also think that interest rates will persist at a little bit higher level, probably over the summer. So it's not the greatest news, but the housing market still should remain pretty strong and tolerate these levels. Also, Fannie and Freddie, which, listen, I'm very proud that I was at the table. There's only 8 board members. It's a Fortune 25 company. So it's a huge honor for me. So I made a presentation to explaining why this should come out of short-term holdings and go into long-term holdings, and it did pave the way for a lot of what you see now with Fannie buying. I can't tell you the amount of mortgage-backed securities that they have bought or how much they have left, because I'm not allowed to tell you, but I will say this. There is a lot of dry powder, okay? So they have a lot more firepower to bring mortgage rates down and bring the spreads down. So there's a lot that we're trying to come up with to do. There's ideas that I proposed. It's tricky because, it is in conservatorship. It's not like a regular company. So we are really trying to do good things, and there's a lot that they could still do. So I'm optimistic about the role that they could play.
Good. I was going to ask you about mortgage-backed securities, what was going to happen with that. Yeah. So with rates being in this low 6 mindset for 2026, thoughts on 2027, and then what are you, give some ideas to the audience on what are the things that you're recommending that originators do today to take advantage of the marketplace and capitalize, because inventory keeps improving. Sales have been pretty strong. New construction is going to see some improvements. We're seeing so many good indicators in the purchase market. And again, I mentioned earlier, on the refi side, rate and terms aren't going to be super opportunistic, but cash out debt elimination, the code refis I talk about all the time, those are all over the place because debt just continues to accumulate. And we still see property values staying steady, which means we've got a lot of equity to work with a lot of our borrowers to help them to pay off that debt, lower those interest rates, leverage them into lower payments and cash and term reduction and all those good things. So give us your prognosis and
Okay, let me
your
start
advice.
off with the new Fed chair. We've got a great Fed chair. We are so blessed and lucky. Kevin Warsh is fantastic.
Love it.
Jerome Powell might be there to poison the well. Hopefully, eventually, we'll get rid of Powell, and Kevin Warsh could be free to do what he is really good at doing. He helped us to get through the financial crisis. He was on the Fed board as a governor. I mean, this guy has gotten ideas. Look at the Dallas Fed trim mean instead of PCE, because all the problems that we've talked about, Dale, with the lagging shelter and the 1985 methodologies. He wants to have new ideas to move us forward instead of like Jerome Powell looking in the rearview mirror and constantly having boom and bust cycles. So he's going to be a great Fed chair for us. So that alone will help us.
That's huge.
That might mean sometimes raising rates when appropriate to prevent inflation. So longer term for us, this is great. Okay.
Good.
Now, what can you do today, and where do we see things going? I was trying to write stuff down. You're right. I love that you coined the phrase, the code, right? Which is those cash out refis, right? Cash out debt elimination. That's your phrase that you quote. You coined. You've been teaching that, and that is so true, because play to your strengths. See, I believe that you're not out there to do a transaction or to get a great rate. You're there to create wealth. If you stop thinking about yourself as a transaction, your job is to create wealth for your customers. And that's the way I always looked at it when I was originator. And I know you did too, Dale.
Yep.
And how do you create wealth? Well, by using the equity in their home, because that's an asset. Play to your strength. That's something that you have. And there's the fact that there's all kinds of debt that they've taken out, whether it be car loans or buy now, pay later or credit cards. There are ways to eliminate this debt by using the equity. Highly effective way. Thank goodness there's been so much appreciation. So you have that ability. Also monitoring and seeing where you are, because somebody that took out a loan 3 or 4 years ago might have been at a little bit higher, like 3 years ago, let's say, could have been at a higher interest rate still, where the rate today is the same, maybe a little lower, or maybe even a little higher. But now, because of appreciation, you could save them lots of money by refining and removing MI. So there are ways that you can get creative. Another is by using things like buy downs that are out there. But look again, if your job is to be, and I want to make sure I kind of got all these, as a wealth manager, as a wealth creator for that customer, then you want to look at the opportunity that there is in building wealth through real estate. Those individuals that are saying, oh, well, I'm going to rent, it's cheaper to rent, they don't understand many things.
No.
First of all, 2/3 of all net worth in the United States is created through real estate. 44 times net worth of a renter is a homeowner. 44 times, okay?
Wow.
Well, 1 in 5 people don't understand when asked, according to the National Association of Realtors, why buying a home is a good investment. They don't know how to answer that question. So you have a great opportunity to teach, to be the educator. First of all, let's compare buying and renting from a monthly payment. Somebody might say, "Ooh, you know what? If I rent the home, it's much cheaper." But you're not contemplating that a good portion of your payment is principal. That is not a cost. It's a forced savings plan. If you put your money in, when you put your money in a savings account, is that a cost? No, I'm saving money. The principal that you're paying on your mortgage is saving money. And then you get the tax deduction. The combination of the two usually levels the playing field pretty closely. Sometimes gets the mortgage cheaper than renting. But even if it doesn't, it's usually temporary, because over time the rental increases will eventually eclipse what you're paying in a mortgage. So let's call them comparable. Okay. But then there's the equity. What you need to do is go to the historical levels of appreciation and say, look, over a 10-year period, if you do even 3% a year and you compound that over 10 years, it's about a 40% level. I know you might say 3. No, there's compounding in there, right? So this is an enormous amount of wealth that could be generated in a 10-year period. If you're going to be living there for 10 years, you won't get that as a renter, right?
That's right.
These are the things that your job is, to create wealth and point these things out. Here's the other thing. I see this as an obstacle. Somebody's saying, hey, I'm doing great in the stock market. Good. I've been getting like 10% a year. And if I take my money out of the stock market, if I put it in a home, the home's only going to get me 3%. Why would I do that? I'm going to rent and get 10%. And this is the one point Dale, that loan originators and real estate agents never get the uniqueness of home ownership. Let me explain it. If let's say you have 60,000, we'll use a $600,000 home.
Okay.
10% down is $60,000. So if I have $60,000 in my portfolio, I'm getting 10% a year. I think I'm going to continue to get it. We all know there's no guarantee, but I think I'm going to get it. Okay. Well, if I pull it out of there, let's think about it. I'm pulling out of an account where I'd make $6,000 a year, right? 10% on $60,000. If I put it in a home, the home's only going to get 3%. So I'm going to lose money because I'm taking out of 10%, I'm putting it in 3%. No. Because that $60,000 is your down payment on a $600,000 home.
Right.
And now the 3%'s not on 60, the 3%'s on 600.
That's right.
So that's $18,000 profit versus $6,000 profit. You're making 3 times the amount. Instead of getting 10% on your investment, you're getting 30% on your investment. Now, somebody might say, well, hold on a second, Barry, but I have a mortgage payment. Yes, you do. But what's the alternative? The alternative is if you have a rental payment.
Right.
And we just went through why those two are somewhat comparable, right? So when you think about it, that's the thing about housing. It is the only investment that is actually a utility that you have. A stock, it's an investment, but I can't live in a stock. So if I put leverage on it, it's a cost. If I do it on a real estate property, on a home, and I put leverage on it, that leverage, the cost of that leverage is in lieu of the cost I would have had to rent because I got to live somewhere.
Yep.
And that's the uniqueness of real estate. And people need to understand this is why it is so magical and why you have this amazing opportunity to help so many families.
Well, and let me take that one step further because that was so awesome how you just laid that out. You also are going to pay tax on the return of that investment.
Yes,
You're going to gain tax benefit through a home.
Yes, you are.
And when you consider the recent changes in the tax codes, where the SALT tax now is $40,000 cap instead of $10,000 cap and includes property taxes, oh my gosh, that's all the reason in the world why you would consider owning that home. So there are so many factors.
The other factor, to touch on your point and to underscore exactly what you're saying, is there's no exclusion on gains on a stock.
Right.
Whereas when you gain on a home, depending on if you're married or you're single, you have a pretty healthy exclusion of the of the gain that's essentially for free if you live there 3 out of 5 years. So that's another benefit that comes into play.
Yeah, and let's not forget that when you own a home and you have a fixed rate, fixed term payment on your mortgage, every year that payment feels smaller in comparison to your income because your income's growing. In rental, many times the rental increases year over year are higher than your increases in your income. So you're actually feeling more of that payment every month. You're not locked into anything. We could talk for hours on why you should be a homeowner. It drives me crazy when I see these quote unquote experts that go online and talk about, oh, you should be a renter. No, they don't call that the American dream. They call home ownership the American dream for a reason. I love that.
That's exactly right. If you're listening to this and you're not pumped up, you should be pumped up to talk to your customers as to why they need to buy instead of renting. But there's so many other reasons to purchase a home, even the move up buyers. Because look, we talked about this at the beginning. Life, just enjoyment of life, and
right.
Having a home instead of being in a rental, or having the home of your desires. Maybe it costs a little more, but if you can do it, and many people could afford it, they're just kind of married to that 3% rate, and they don't want to do it. And they say, 3 to 6, I'm not, I'm giving up a 3% rate. But you're also giving up enjoyment. You're giving up, in the limited amount of time we have for you and your family to be living somewhere that they'd be happier. What's the price of that?
Well, Barry, as always, you just bring so much knowledge and so much wisdom. Any other thoughts you want to share with the audience on what's happening in the marketplace, or from a lender or loan officer perspective, what we should be doing to just capitalize on this marketplace we live in today and help more people save money and create home ownership?
We talked about this before, Dale. So the conversation I'd be having right now with every customer that I'm doing a loan for, but I'd also be going back to all the customers that I've done loans for is going to sound something like this. Dear Mr. and Mrs. Customer, thank you. I'm happy we're doing the application together. But what I also want to explain to you is this, is that while we're doing the application on this home that you're buying today, see, a lot of our loan originators, their job ends the day of closing. My job continues on. It almost begins the day of closing because that's when I start trying to create more wealth for you by monitoring the market. And I'll show you this chart of how fleeting these opportunities are. And the thing we want to do is we want to capitalize it. So I want to monitor it for you. But what I would like to do is establish something called a strike rate. Strike rate, what's that? See, just like if you're executing a stock, that's when I want to lock in a lower rate for you, but it's got to be right. So you give me a dollar amount that you want to make sure you're saving every month that you're happy with on a refinance. And again, look at how quick, 1 day, 2 days, and then boom, it's gone. So how much do you want to save a month? 200, 300, 400, 250. Barry, if I could save 250 a month, I'll do it. Bingo. I'll convert that to an interest rate for you. Yep. And I'm going to put it in my strike rate tool. When it hits that rate, I'm going to call you and tell you I've already locked you in. We're in application. Is that agreeable to you? And get their commitment. That's what I'd be doing today. And this way, when you get 1 or 2 days, you're not, oh, who do I call? Oh, I called them. Oh, what do I do? I got to talk. I got to figure it out. I got to get in touch with my significant other. You don't want to have that.
Done.
It's gone. You want to be able to save these people money, and you show them how fleeting the opportunity is. Now, those are the people I'm doing their apps for. Go back to everyone else and just establish a strike rate with them as well. That's right. Say, here's where you are. Where's your strike? And this way you can reap huge benefits because then it's just boom, 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 boom. Lock, 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 lock. I got you.
Well, and I love that because it's a ready-made lock. One of the biggest weaknesses I see working with loan officers all over the country right now is they're afraid to take the action at the end of the application to get that bar to move forward. Well, if you've established this number and the number got hit today, there's no question. I'm calling you on your number. We're locking it right now. And the bar's like, oh, okay. They don't have to think about it. You take all the guessing out of the game, you win the deal.
Our dear friend, who's brilliant, by the way, and he's a wonderful human being as well, Tim Brahim. He's just one of the greatest guys, one of the smartest guys out there. He's got a great product, Loan Atlas. Tim is just fantastic.
Been around a long time, yep.
And he's brilliant too, right? Yep. So he would have this famous line, and only Tim could do it, because he would call his clients and he says, "Hi, it's Tim, and it's time." So, it doesn't really work with "it's Barry" or "it's Dale," but that was his line. But it really just goes to show establishing that strike rate, and that's the way we would just do it. Then you just call them and knock them down.
I love it. Well, Barry, I can't thank you enough for jumping back on. I think I've told you this before, but just so the audience knows, this is year 5 that we are in Batting 1,000. I've only had one guest 5 times in 5 years, and it is my friend Barry Habib. And I hope we continue that streak from now on. So,
Dale, it's a privilege to be with. Anytime I get to be with you or talk to you, it's a gift, and it's a highlight of my day.
Thank you. The feeling's mutual. So, guys, if you are not on MBS Highway, if you are not subscribed to it, if you're a lender and you don't have it in your company, I'm telling you, do it today. This is a tool that you need to have for things like Barry just talked about, the strike rate that he talked about, and all of the forms, all of the different tools that they have to help loan officers really talk to their borrowers at a huge trusted advisor level versus a loan officer level. The tools are unbelievable. It is such a great product. I totally endorse it. Barry, tell the audience what they need to do if they want to work with you, work with your team, get access to MBS Highway.
Send an email to Diana at MBS Highway, Diana at MBS Highway. We'll take care. Just mention you were on the thing with Dale. We got you covered.
Awesome.
I don't, ask somebody who's on MBS Highway. They'll tell you. So, all right. Much love, Dale. I love you, brother. Folks,
love you too, brother. God bless.
Thank you for spending time with us, and just from the heart, just lots of love.
Love you, my friend. Look forward to seeing you soon. That'll wrap up another Batting 1,000, where we're with the heavy hitters. Was with my dear friend Barry Habib. Great episode. So much wisdom. Thank you all for being with us. God bless. We'll see you on the next one.